With prices rising on just about everything, many are feeling the pinch in their wallets. But what if I told you that amidst the rising costs lies a golden opportunity to survive and thrive financially? Warren Buffett, the Oracle of Omaha, has cracked the code on turning inflation into a wealth-building ally. Today, we're going to walk you through why inflation happens, and most importantly, how savvy investors can actually get rich during inflationary periods. There's a lot to cover, so let's dive right in. It may seem counterintuitive, but inflation makes the super wealthy even richer. Here's why. The ultra-wealthy own hard assets like real estate, commodities, and businesses. As prices and costs increase across the economy, the value of their hard assets rises too. For example, take a billionaire who owns an extensive real estate portfolio, including apartments, office buildings, and retail shopping centers. As inflation pushes up rents and property values, the billionaire's net worth skyrockets. The same goes for trillionaires like Elon Musk, whose fortune is largely tied to his ownership stake in Tesla. As Tesla has raised vehicle prices in response to inflation, Musk has gotten far richer. In addition to rising asset values, the wealthy often own businesses well-positioned to pass higher costs onto consumers while protecting their profit margins. They can quickly adjust prices and use their leverage to maintain strong cash flow even as expenses rise. Many ultra-wealthy also use inflation to acquire hard assets more cheaply. When inflation causes asset prices to dip temporarily, they swoop in and buy at a discount. Pretty savvy. In summary, the wealthy typically benefit during inflationary periods because they own hard assets and successful businesses. Their asset values rise, they maintain pricing power, and they snap up new assets when fear incites sell-offs. How can average folks emulate the ultra-wealthy and get rich during inflationary periods? I'm so glad you asked. Let's get into some proven inflation profit-boosting strategies. Invest in real estate. Buffett's real estate strategy during inflation is akin to catching a tailwind. As prices and rents ascend, so does the intrinsic value of your property portfolio. Leveraging becomes the secret sauce, allowing Buffett to borrow at fixed rates and extend his real estate empire beyond cash limitations. The crucial dance here is ensuring that the income from rentals covers and gracefully pirouettes over the debt payments. Picture your property as a performer on the wealth-building stage, its value rising in a harmonious rhythm with inflation. A prime example is Sam Zell, the billionaire real estate mogul who built an empire based on Buffett's advice. By using leverage to acquire apartment buildings and commercial properties, Zell was able to multiply his returns as rental income rose with inflation. The key is to ensure rental income exceeds debt payments by a comfortable margin. Manage interest rate risk with fixed-rate financing. Be conservative with valuations and leverage. Buy stocks with pricing power in. Buffett's stock market symphony, the melody is composed by companies with robust brands and steadfast customer loyalty. Think Apple and Coca-Cola. During the inflationary crescendo, these businesses have a unique ability to adjust their notes, effortlessly raising prices to shield profit margins. Buffett's cautionary note: steer clear of stocks peddling commoditized products, those silent instruments with zero pricing power. Navigate the market with these melodic stocks and let the rising price harmony play in your favor. Former Buffett portfolio manager Lou Simpson invested in companies like Wells Fargo and Capital Cities Broadcasting, later acquired by Disney, that had pricing power even during recessions and inflationary periods. Focus on companies with trusted brands, proprietary products, and loyal customer bases that support premium pricing. Avoid price-sensitive commodities and consumer discretionary products. Invest in commodities. Buffett's venture into commodities is a dance with the elements: oil, natural gas, agriculture, and metals. These commodities serve as a shield against the gusts of inflation. Whether you invest in commodity company stocks, ETFs, or dance with futures contracts, the goal is to let these assets twirl gracefully, protecting your wealth from the inflationary whirlwind. Buffett's playbook encourages you to choreograph your moves wisely as you waltz through the market's inflationary tango. Billionaire investor Jim Rogers amassed substantial wealth by investing in commodities like precious metals, agriculture, and oil and gas during the 1970s inflationary period. Commodities can protect against inflation but require expertise. Consider diversified commodity ETFs or companies with commodity-linked assets. Understand the cyclicality and volatility of commodities. Tip #4. Negotiate salary increases in the Buffett Personal Finance Playbook. Negotiating salary increases is your powerful self-investment. Armored with data and transparency about your living costs, you enter the negotiation stage. Here, Buffett's advice is crystal clear. Don't let wage growth be a spectator sport. Elevate your income above the inflationary tide, boosting your financial stamina and preserving your purchasing power. It's not just a negotiation. It's a strategic move to ensure your financial well-being in the face of rising costs. If your skills are in high demand and you perform exceptionally well, use it as your leverage. During the pandemic, virtual assistant jobs and remote work were in high demand as physical offices were closed. Benchmark your skills and experience against current market rates. Have open conversations with managers about inflation impact. Consider job switching if the current employer is unwilling to adjust compensation. Tip #5. Pay off debt. Aggressively, Buffett's advice on debt during inflation resembles a sprint, not a marathon. Fixed-rate debt becomes a cheaper companion amidst inflation, but the maestro suggests a swift sprint to pay off variable-rate debts. The tempo is set. Credit cards, variable student loans, HELOCs. Wipe them out first. Summon the motivation for this debt-crushing sprint, a proactive move to secure yourself against potential interest rate surges and become inflation-proof. Prioritize paying off credit card debt to avoid accruing interest charges. They cut expenses and boosted income to achieve this. If you are a business owner who has accrued some debt for your capital, be sure to settle it first. Make a debt paydown plan, focusing on highest interest debt first. Consolidate debt to lower rates if possible. Increase income via side gigs or freelancing as a way to accelerate payoff. Tip #6. Monetize existing assets. In the realm of asset management, Buffett wears the crown. His strategy involves turning your assets into performers on the cash flow stage. Rent out those idle rooms, list unused equipment online, and let the eBay spotlight shine on your hobby items. Creativity is the key to monetizing these underutilized assets, ensuring they don't just sit in the audience, but actively contribute to your financial orchestra. This proactive approach safeguards your assets from losing value in the inflationary overture. During the 2008 financial crisis, homeowners generated income via house-sharing services and renting out parking spaces, garages, as assets idled. Evaluate all assets, vacation homes, equipment, RVs. Use online platforms to generate rental income where possible. Sell unused jewelry, art, and collectibles. Find creative ways to monetize. Tip #7. Avoid cash and fixed-rate bonds. Buffett's warning against the perils of cash during inflation echoes like a thunderclap. Inflation's storm renders cash powerless, making it akin to financial debris. Caution is also advised with fixed-rate bonds, those instruments struggling to keep pace with the rising inflationary tempest. Buffett's sage advice: don't park your money long-term in this financial whirlwind. Seek safer harbors to protect your wealth from erosion. Tip #8. Seek assets that create value. In Buffett's worldview, assets are not mere placeholders, they are creators of value. Distinguishing between unproductive assets like gold and the active contributors, farms, businesses, and rental properties, is paramount. Choose assets capable of not only weathering but flourishing in the inflationary landscape. This strategic selection, emphasizing pricing power and productivity, ensures your financial portfolio doesn't merely survive, but thrives amidst the challenges posed by inflation. Farmland has intrinsic value, with food prices rising over time. An acre of farmland purchased in 1990 for $2,000 would be worth over $12,000 today. Look for assets capable of passing on inflationary increases, like rental property and equipment leasing. Owning value-producing businesses also provides inflation protection. Key takeaways all right. We've covered a ton of ground here. Let's recap the key strategies for getting rich during inflation. And there you have it, folks. Let's sum up the wisdom from the Oracle of Omaha, Warren Buffett, real estate leverage. Ride the wave of rising real estate prices and rents. Leverage strategically, ensuring your rental income covers that smartly managed debt. Pricing power stocks. Navigate the stock market with precision. Opt for brands like Apple and Coca-Cola, wielding the power to raise prices during inflation and safeguard those precious profits. Commodities. Shield. Dive into the world of commodities, oil, natural gas, agriculture, and metals. Whether through stocks, ETFs, or futures contracts, let them be your shield against the waves of inflation. Negotiate income boosts. Don't settle for the status quo. Invest in yourself. Negotiate those salary increases above inflation. Arm yourself with data and transparency about your living costs. Debt. Pay off. Sprint. Crush those variable rate debts first. Start with the credit cards and student loans. Inflation makes debt cheaper. Wipe out those high-interest debts swiftly. Asset monetization mastery. Get creative with your assets. Rent out those extra rooms, list those unused items online. Generate that cash flow from what you already own before inflation knocks on your door. Caution with cash and bonds. Cash isn't king in inflation's kingdom. Be wary. Fixed-rate bonds struggle to keep pace. Take heed, dear investors. Value-driven assets. Choose your assets wisely. Opt for farms, businesses, and rentals with pricing power and productivity to outpace the inflation storm. In a nutshell, fear not the inflation beast. Thrive in its midst with Buffett's playbook. Stay nimble, seize those opportunities, and let the wealth-building adventure unfold. Share your favorite strategy in the comments, and until next time, happy investing.